Hello, thanks for joining and welcome to our next panel. This panel, we're looking at banking on a new digital ecosystem. I think when we think about finance, we all recognize that finance and technology have a very, very long history. We think about the earliest settled civilizations. We think about some of the earliest innovations involve finance. We can think about minting of money. We can think about paper money. We can think about checks, bills of exchange. But really, it's been in the past decade where we have seen the most rapid developments in history in the context of finance and technology, really beginning from about 2007, 2008. The iPhone, M-Pesa, the global financial crisis, all of these triggered a revolution in the way that we think about finance and technology over the past 10 years. The advent of fintech, of techfin, of new challengers, of disruption to ecosystems. But I think we can also agree that the last year, 2020, with COVID-19, has taken everything to an entirely new level. COVID-19 in just a year has really driven 10 years of digitization of everything, but of digitization of finance in particular. And this brings with it huge new opportunities, huge new challenges, and also some huge new risks. And we're here today to talk about some of these issues. My name is Douglas Arner. I'm a professor at the University of Hong Kong, and I'm joined by an outstanding group of people coming from finance and technology backgrounds. Noah Pepper, APEC Business Lead at Stripe, Kahina Van Dyke, Global Head Digital Channels and Data Analysis at Standard Chartered, and Henry Ma, Chief Information Officer and Executive Vice President at WeBank. And I think you'll find each of them have not only tremendous experience in their own fields, but very varied backgrounds. And I'd like to ask each of them to start by introducing themselves, a little bit about their journey, and also to tell us all a little bit about their firms. Noah, over to you first.
Hey, Douglas, thanks so much for introducing me and welcoming me to this panel. I guess what I'd say is my background has always been in product and engineering. I've always loved building things. And in 2011, about 10 years ago, I started an analytics company. And as part of building that analytics company, I became an early Stripe user. And that's kind of how I first got to know this company offering payments online. Later on, that company was sold to Twitter. I ended up spending much of time in the Valley there, or San Francisco, metaphorically the Valley. And I'd always admired Stripe and really loved the mission of serving startups. So what we think about at Stripe, and the most compelling thing to me about Stripe, is that we're really working on building financial infrastructure for the internet. Today, you can send text, 4K video, anything else from any point A to any point B on the planet. And it's pretty easy, fast, and seamless. But if you want to send money from point A to point B across different countries, different payment methods, different currencies, it gets pretty complicated. And so that's why we're building something that we call the GPTN, or the Global Payments and Treasury Network. And this is an underlying platform that sits beneath all the other products that we build at Stripe. And so one of the main things that I'm focused on here in APAC is building that sort of almost Amazon Web Services kind of virtual compute layer to allow folks to build more businesses and access kind of more financial capabilities on a global scale. So we serve a lot of platforms that in turn serve SMBs, folks like Wix or Squarespace or Audible or Deliveroo or Shopify, everyone from food and beverage to small stores, things like that, as well as a lot of tech companies proper. And in particular, we think about Asia Pacific being important because this is a tough market for startups. If you're outside of China or India, you really need to go international pretty quickly to deliver those venture-backed returns or to build a really large business. So I'm really excited to see the future partnership between tech companies and regulators to open the door to more financial inclusion for small and medium-sized businesses, folks who are just starting the journey of building a new, hopefully large business, and kind of everybody in between. So that's kind of a quick intro on what I've been up to, and thanks, Doug.
Thanks for that, Noah. And I think you've picked up a number of big themes that we're going to come back to, in particular, some of these issues around financial infrastructure, around financial inclusion for small and medium-sized enterprises in particular, and around cross-border payments. I'd like to now bring Kahina on. And Kahina, as we're going to see, has worked really across the financial sector spectrum and is now heading up Stripe's of Standard Chartered Bank's digital channels globally. Kahina.
Hi. Well, hello, everyone, and thanks for inviting me, Douglas. This is, the financial ecosystem and the future of banking is close to my heart. So it's great to be here. Yeah. So my name is Kahina Van Dyke. I run digital and data at Standard Chartered globally. And my background, just a few moments on that. I actually started in international banking way back when, before the financial crisis, and joined banking to be a early member, employee number 7 of an internet team at one of the biggest banks in the world. And so really have seen this from the beginning, right? And this kind of growing emerging technology that then became kind of integrated into everything that we do. So started my life as an international consumer banker, working across Europe, Middle East, and Africa in the times where, again, early 2000s, you're talking about SMS alerts, launching your first online banking portals. Central Eastern Europe was exploding with growth a lot. Middle East was also an area of a lot of growth. And seeing that really we could use technology to solve access and simplicity for clients. And what I think is interesting is I went from banking to global payments, working at MasterCard as cash. As cash became the war on cash, or the world beyond cash was emerging, and that was fascinating from an ecosystem perspective. And then did my next chapter in Silicon Valley, working at big tech platforms, working at Facebook, and working in fintech at Ripple, and I'm back now into Standard Chartered. And I think the reason why I'm so excited, I'm the most excited that I've been in my career, is because exactly what you talked about, Douglas. You talked about, there's this intersectionality and this convergence of trends that have led us to a place today. And the proliferation of mobile, which we all understand, the interconnectivity of the world markets and global markets and small markets and big markets and micro merchants and big corporations all living together in this ecosystem that's driven by digital connectivity and driven by data. And I think that when you look at what is happening now and why it's so exciting for us at Standard Chartered is we are actually embarking on this journey specifically in the markets that we serve, because we serve with an unparalleled network across 60 countries. And a lot of those countries and those communities and those companies, we've been doing business with them for decades and generations. We understand those markets, but we also understand that technology gives us an opportunity to deliver services in a more seamless, efficient, and simple way that helps them grow their businesses, helps bring more prosperity into those communities. So our investment, we have made a major investment in technology, in people, in automation of processes, and we will continue to make that investment because we believe we can transform our unparalleled network into a global financial services platform that not only serves our existing clients, but actually drives the open banking ecosystem in the markets that really need it the most. So it's a very exciting time. People said to me, you left Silicon Valley to go into banking. And I think it's the best time actually to be in banking because we have a unique opportunity and a unique purview to really drive a lot of sustainable prosperity in the markets that we've been in for a very long time. So excited to be here and have the conversation today.
Thanks for that, Kahina. And I think we're definitely going to come back on some of those points. And I think you've highlighted a couple. One is this evolutionary perspective, and definitely this is something that I think is very important. The second is really the core role of data in these processes. And really the third, which we're going to come back to, is what incumbents are trying to do. Henry, I'd like to bring you on because I think your firm is one that maybe some of those that are joining today know a little bit less about. And so if you could tell us a little bit about what you do, but also a bit about WeBank.
Okay, thank you, Douglas, and hello, everyone. It's really my pleasure and also very excited to join the panel today. Probably like what you said, a lot of the audience today may not know too much about WeBank. We are actually the very first privately funded bank established in 2014, headquartered in Shenzhen, China. But the very unique characteristic of our bank is we are the very first digital-only bank in China. And since our establishment in 2014, we have been very much focused on serving the long tail part of the market, the unbanked or the underbanked population in China. And we try to put a lot of emphasis on technology to actually enable us to serve this market segment better than our competitors. As a matter of fact, because we are one of the founding shareholders is Tencent, they own 30% of WeBank, right? So we are very strong in our technology DNA. From the beginning, we already identified areas like artificial intelligence, blockchain, cloud computing, and big data to be the key areas where these type of technology can be highly leveraged to serve a wider market. And so far, we were able to create a pretty sizable market. We're already serving more than 200 million individual customers and also 1.3 million small, medium-sized, or even micro SMEs in our portfolio. I myself, I started my career as an engineer in the Silicon Valley, and have been back in China in the Far East since year 2000. But even I get into the area of the financial industry and banking, I still very much focus on doing technology. And I also have a strong belief that technology can actually contribute a lot to drive financial inclusion, to make financial services available to a much wider market. So I see a very exciting journey down the road, having technology and finance industry coming hand in hand.
Thanks very much for that, Henry. And, I think almost a starting point that we just can't ignore is over the past 10 years, we've all been on so many different panels where we have talked about disruption, new entrants, startups, and disruption. What is going to be the impact on incumbents? And in the past couple of years, we've had a new focus on tech fins, on big tech. And in a way, our panel today kind of divides up a little bit in terms of those firms, but also, as you've just seen, their backgrounds, everyone has worked across the spectrum. And really what I'd like to do is kind of start up with Noah from the startup perspective. In other words, Stripe started as a small firm. It's grown quite a lot, but, have we really seen this disruptive potential that everyone spent so much time over the past 10 years talking about?
Yeah, thanks. So a couple of things to think about there. One is that Stripe not only started as a small company, but started serving small companies, right? And as we've grown, our customers have grown with us. And we now serve a broader spectrum of customers, everyone from sort of the smallest startups that are just getting started tomorrow that have no revenue yet, up through folks like Amazon. And one of the things that we're seeing as a consistent pattern in kind of this change in the market is, first of all, something we touched on a minute ago, which is that everybody is becoming a more global player. And so there's a lot of businesses today that couldn't exist in the way that they do without this more global footprint of customers for the types of merchants that we serve. So examples of that might be folks like Fashion Valet or Hot Hijab, which are firms focused on Muslim fashion that can scale globally or regionally, right? And we also work with companies that are just like smaller SaaS products that serve a broad set of users. And so That's kind of one trend that I see. And so it's essentially the important thing here to think about is that the internet has made it so more types of businesses can exist in the world. That means more people can be owners of a company, more employment opportunities, more products for customers, and the sort of ability for folks to scale globally just creates more opportunities for these niche products. So that's kind of one point that I would make. The other, and perhaps the bigger trend, more important trend, is really around platforms. So there's this important gap. We talk a lot about financial inclusion as it comes to individuals, and we talk a fair amount about new technology when it comes to larger players, but small and medium-sized businesses often get stuck in the gap between. And that's where what we're seeing is a lot of platform players that are coming and building products that are not exclusively technology, but they are disrupting sort of, so they're not exclusively finance, but they're disrupting sort of what was a piecemeal set of solutions that small businesses had to struggle to put together, and they're offering a comprehensive solution. So one favorite example of mine is a platform called Squire, and they're a company that creates software for barbershops. And this is really cool because they can create a complete stack of tools for everything from booking and other things that these barbershops need, but they also serve payments by essentially reselling Stripe. And that's the type of business that we are really excited about helping create more of. And I think that they're disrupting sort of a whole stack of other businesses by ultimately serving those small businesses more effectively. And so I think as we think about that, one other point that I would just make is that there's a lot of change in sort of the on and off ramps to the financial ecosystem. So Stripe, or other companies can create platforms that other technology companies can build on, that then other technology companies can build on, and ultimately a consumer or a small business may build on top of that and benefit. But at the end of the day, we're still part of the same financial ecosystem, and we work very closely with existing financial institutions to make that happen. So it's not always an if kind of one or the other kind of dynamic.
Just before I switch, I want to ask, you mentioned the idea of building infrastructure. From the standpoint of Stripe, how do you see yourselves building infrastructure?
Yeah, so generally what we do there is in each market, we think about a couple things. One, how do we build a set of APIs that would allow programmers anywhere in the world to access the tools and capabilities of a local, regional, or global financial system? And so it's about creating a compatibility layer between the existing set of kind of financial capabilities in a country or a region, in some cases globally, and essentially creating that compatibility layer with the new set of sort of modes that people expect to operate in, which are really kind of these well-designed and abstracted APIs. So one part is thinking about that. And then another part, kind of the infrastructure component, is thinking expansively about how we can allow other folks to build products that serve this broad range of businesses. So it's really this platform design that I was talking about. And so that comes down to extensibility and making it possible for people to build on top of the tools that we offer, not offering sort of a specific complete solution on our own.
Thanks for that, Noah. And I think that brings us really directly into Kahina and the context of your traditional bank, your incumbent. If I look at what Noah was just saying, much of that was about traditional businesses that a bank like Standard Chartered would be focusing on, small and medium-sized enterprises, cross-border payments. What are you all doing differently, or how are you seeking to expand your market through digital going forward?
Yeah, so listen, what Noah was just saying is really important, because it is about the integration of services, core traditional banking services with value-added services to deliver an integrated client experience. And so our digital North Star at Standard Chartered is all around delivering a global platform that's driving and power in financial services, trade, and commerce. Because as we have this interconnected global market and economies, we know that those businesses, they need to sell their goods, they need to be connected, through some trade financing solutions. They need FX solutions through our financial markets products, and all of that has to be digitized. They need to be able to do that at their fingertips. And so our entire North Star strategy at Standard Chartered is about building that global platform to drive simplicity, ease of use. And a lot of things we talk about that I don't think we spend enough time on is how digital drives transparency and how data can drive transparency and really more sustainability in a lot of these business models that were very manual, right? And so I think especially for both our small companies and mid-sized companies and large companies, how can you create safe, integrated connectivity with traditional financial services, because you do need financing. If you're going to be doing cross-border financing, you need a different set of solutions. You do need FX when you're all of a sudden dealing in 6 or 10 different currencies. And so how we extend that traditional core services into the digital world is really what our platform strategy is all about. So I would agree it's all about platforms. And then the second thing is, I think, and it's touching a little bit on what do traditional quote unquote banks, incumbent banks do, and what do some of these other providers do, is how do I create an ecosystem, banking ecosystem through APIs, right? So we've launched over 100 APIs in the last 6 months. How do we create an API ecosystem that allows some of these other service providers to deliver their services that'll be valuable to our clients? So I think we are moving away from everything is a closed garden in banking and financial services into how do we create safe, and curated ecosystems that allow other participants to come in. So I think that's why it's such an exciting time, because I feel like those who get it, who are incumbents, are thinking of themselves more like a fintech platform than a traditional bank that had a vault and a key and nobody could get in. So I think that is the shift we're seeing. And there's no reason in my mind why Standard Chartered couldn't and shouldn't be one of the largest fintech providers across the emerging markets in the 60 countries we serve. So, and I think that mindset shift is happening now, but it's not happening everywhere at the same pace. But we're all in the open banking ecosystem platform strategy.
So I think some really important things. And I guess the first big question that I have is from the standpoint of operating on a cross-jurisdictional basis, what sorts of challenges are you seeing from using data from, let's say, an SME that is operating in Kenya seeking to do business with someone in China? Obviously, that's one of our sort of core objectives, is how we can smooth these things. But from the standpoint of data, what sorts of issues are you running into?
Well, I think it's the issues that everybody's running into. So there's a big difference between providing data to your clients that is their data in a more actionable and visually engaging way, right? And then there's the access kind of rules and governance around data that is about anybody else. And I think that's a very big distinction. So our focus right now is how do we help our clients understand the information about what they're doing in their business. And then it really is about every jurisdiction is different. But the good news is, because we have been operating in dozens and dozens of these jurisdictions for generations, we have that local understanding of the regulations, of the business models, the expectations of our clients. So I do think that there's one thing about global platforms, having worked at one of the biggest ones, that is about standardization. And standardization drives that efficiency. And they've used data to drive, client relevance, segmentation, targeting, and all those things are great for client experience, but they're not great when you're talking about understanding the jurisdictional restrictions and controls in each market. And that's why I think that there's been a little bit of a humbling, I guess is my best word, I'll say it, that you can't just have one size fits all. The jurisdictions matter. Market knowledge matters, and having people who understand those countries and are from those countries is really important. And so I think that's one of how we think that is a unique kind of strength that we bring is that local insight and the fact that we have been operating for generations. A lot of times it's cool to be new, but sometimes it's more, you have more wisdom when you've been around for a while. And I think bringing those two things together is where we have an opportunity as an industry to really go to the next level. You have to understand and respect the local jurisdictions that you operate in.
I think that's a hugely important point, and it's something that some of the promise we think back a decade ago was this idea that digital could be the same for everybody everywhere from one single platform. And I think what we're finding is exactly what you're saying. I think Noah was saying this as well, that increasingly what you're finding is that the local differences, the local rules, local systems all do matter, and that it's very difficult to build single integrated platforms. With that, I want to shift to Henry. And I think, Henry, if we think about WeBank, you guys are not a big tech, but you have a close relationship with a big tech. You're a very data-focused business, a tech firm in many ways. And I think, tell us a little bit about how that model works and whether you think it has viability outside of a huge data market like China.
Right. Like Douglas, as you mentioned, I think data is a very key element to our business model. In fact, when we first get started, we already know that we don't really have the kind of resources that big incumbent banks in China already possess. And if you try to stay competitive in the market and also be able to serve the kind of market that they were not serving well, we have to make good use of technology and data. And so from the beginning, we already decided that we are not going to do everything by ourselves, but instead try to work closely with a lot of partners. So that actually go back to a lot of the comments, a lot of the points that Noah and Kahina has mentioned about. Try to build an open banking ecosystem. So we have opened up a lot of APIs so that our partners will be able to access. But we also actually take it even a step higher beyond that. For example, on one hand, we use a lot of open source technology to drive down our cost of operation. Instead of like buying off-the-shelf hardware and software, we build pretty much all the core system by ourselves. And that substantially drive down the cost. In fact, for last year, we were able to operate on a per account basis at less than 3 RMB per account per year, right? So this is substantially lower than the cost being there by other major banks. And that might easily 10 times higher of what we are paying, right? And by doing that, we are able to really focus on those like high volume, low value transactions, which a lot of those bigger banks may find it expensive to handle, right? And on the other hand, we also because of the fact that we use a lot of these open source technology, we also actually contribute a lot of the technology capabilities back into the community. And that also go back to the points that like different market will be different, right? Even like within the same market, different industries will be have very vastly different requirements. So by opening up our technical capabilities and let our partners build their own solutions to actually interact with our financial offering, that actually build a much richer and also more comprehensive offering for the whole ecosystem. And that's really what we term as the open innovation and the open collaboration kind of model that we try to propose. And I think beyond China, there's also a huge potential in other markets, especially like in the ASEAN market, in the Southeast Asian market. And also back to the point that the data is very much the key element in our business model. We also work on a lot of technologies to really enable the secure storage, reliable transmission, and how to actually enable partners to collaboratively make good use of the data, and while at the same time being able to stay compliant with all the data regulations, which is actually becoming more and more stringent. So things like blockchain and also like federated learning in the artificial intelligence space actually come into play.
Yeah, I think that's a tremendously important point. I think it's, one thing that's really interesting is if we think about this idea of SME financial inclusion, one thing that we've very much seen in China, but also to an extent with some of the big techs in the US, has been that the use of large volumes of data has enabled us to do something that has always been sort of the holy grail of SME finance, which is cash flow based lending. Now, what I'm kind of curious is from the standpoint of your firm, is there a way in which the data that is necessary for cash flow based lending can be opened to a wider group of users, or is it something that the amalgamation, the concentration is necessary to make the model work?
Douglas, is this the question for us?
Yep. So if you're thinking about data, I think one thing that the big tech firms have done amazingly well is use data to enable cash flow based lending to SMEs. That has brought in finance to firms that previously were not accessing. But part of that model has been about amalgamating vast amounts of data. Are there ways to open that vast pool of data to others, or is it by nature something that tends towards concentration and control?
Maybe I will share our perspective at WeBank first. I think the reason why we have been actively working on technologies like federated learning and also blockchain is because of the fact that we foresee the days where data is going to be scarce resources, and in order to really make the actual data to create its maximum value or optimal value, they have to be put together in the traditional way, right? But as data regulation go more stringent, the sharing of data will become less and less possible. That's why technology actually comes into play. Given the fact that data will be more in the form of islands, how are partners still being able to leverage the data that they have and try to build model collaboratively? I think those type of technology will become more and more important down the road. And as I mentioned earlier, I think things like technologies like federated learning and also blockchain will be able to facilitate a lot of people, like co-building of model, making use of data being owned by different partners, and also technologies like blockchain will be able to facilitate the reliable and trusted transmission of data. So, I mean, these are the technologies that are going to enable us moving forward, even though that the concentration of data may not be possible in the longer term.
Exactly. And I think that's something that all three of you, and I kind of want to open this one up a little bit, that all three of you have talked about. And that's this idea of data and how can you enable open access to data, open banking, open finance. And I think, Henry, from your perspective, you've outlined exactly one angle. I wanted to go back to Noah and Kahina. And Noah, from the standpoint of open data, of access to data, as a sort of, you're not really a startup anymore, but as a new entrant in many markets, what is it that you're looking for in terms of access? What does open banking, open data mean to you as a firm?
I think ultimately the openness is important for creating choice for businesses, for consumers. And I want to come back and actually kind of, this relates to another topic that Kahina mentioned, which I think is a really important one, is this notion of like local knowledge and local capabilities. And I think what we really want to end up in globally over time is a deeply interconnected system where a lot of local players can have folks who are regional or global build on top of them, and then local folks somewhere else build on top of that, right? And so there's many cases where, give a concrete example, Stripe may partner with, say, a local bank in Japan or Indonesia or India or wherever, and that can allow a platform to build on top of Stripe that then allows somebody from the Netherlands to gain access to either a merchant or a consumer in that other market, right? And so as you get some of these layers put together, where everybody's built high quality APIs, it really enables and opens up more capabilities. Now, to bring it back to data, as you do that, that's going to throw off data for each of these kind of players in the different part of the ecosystem. And that data creates opportunity for building new products, but also securing the financial ecosystem, right? A lot of what Stripe uses data for is everything from risk monitoring, anti-money laundering, anti-terrorism financing. There's a lot of importance in having that data to keep the financial ecosystem safe and secure. And so I think that's another kind of dimension that I think about with respect to data. And then I think there's, as we see more data regulations coming into place, I think those are going to sort of pull and create some tension where there sort of is a desire to use data to create more products and create security. There's a desire to keep data secure and ensure that it doesn't fall into the hands of folks who shouldn't have it. And there's a desire to create kind of either competitiveness or access to data or locality of data. And as each of those comes into play, there's going to be tension pulling in different directions. And the more clear the regulation can be, the better. But also, the more onerous the regulation is, sort of the better for large companies and larger technical players, and the worse for new entrants is something that I think about and worry about in this domain.
Yeah, I think that really outlines it, that the question of around how can you make data usable, but also how can you make them safe, and both from the standpoint of business opportunities, but also from the standpoint of market integrity. Kahina, from the standpoint of Standard Chartered, open banking, open data, what is it that you would like to see?
Yes to open banking. I don't think we've quite crossed the bridge into where I would say we are in open data. Data for us, we're focused right now on, we look at data in many different ways, but I think what, Noah laid it out beautifully, but there's proprietary data that we have to keep safe and private and make sure that our client has control over, right? And access to their own data in compelling ways. So we have spent a lot of time in the last year, this year, in what we're calling kind of, client dashboards that give them the information and the insights to run their businesses in more efficient and, profitable ways. I think there's then, how do we use data that is more kind of public data around either industry or sustainability is big for us, right? And our clients, especially the markets that we serve and kind of our position, which is like, it's really important to understand how, some data around your supply chains, et cetera, can help you ensure you're having sustainable business practices, both environmentally sustainable and labor practice sustainable business practices. So I think there's the ingestion of more public data. I think that the grays and the details in between are really important. And it's not just jurisdictionally important, it's about principle and integrity important. So I think we have to take every company finds their own level of what they think is right for their business. We are on the more conservative side when it comes to data. That being said, some of our biggest investments are in data architecture, are in advanced research in quantum computing and machine learning, because we understand that data is only the data needs of our clients and the data needs of our organization. As we automate more and more processes and move to real time decision making are going to increase. And so for us, data investments are happening now, anticipating that future, but we are still looking at, number one is privacy, security, control for our clients, for the data that is proprietary, and then how we bring in helpful information for them to make better business decisions. So, but I think there's going to be a lot more time and energy and thought And that is something where I think has to be greater collaboration around data sandboxes, for example, and in all of we think about co-creation and innovation with our stakeholders, our clients, but also with regulators to figure out that right level, because Noah's right. You can over-rotate on control and feel really safe and actually limit growth and have inequitable opportunities for prosperity in the world. So there is this balance that we're just going to have to keep working on to get right.
Yeah, I think that really takes us back. And I wanted to ask, Henry, you had mentioned something that I think is worth spending a few minutes on, because often when people think about data, they think of the idea of bringing everything together in one single place. And that, as we're all seeing, brings an increasing number of risks and raises an increasing number of issues. You mentioned this idea of networked models of federated analytics. Can you explain a little bit about what you mean, how those things work?
Right. With the assumption that data will be siloed or will be more exist in the form of data island down the road due to regulations, we believe that building up a network of partners, and then on top of it, we actually allow all the participants to participate in what we call the federated learning network. That will be able to enable them to build some submodel, and then combining all those submodels together, we'll be able to build a more comprehensive model for different purposes, like for example, product recommendations, underwriting, and even other like fraud detection kind of rules, without exposing the detail of the data. And this is something that we are already experimenting in our own business cases and also in the China market. And as a matter of fact, we are also like experimenting it with some international players as well to let them try out this kind of model. The federated learning software that we have developed is already open sourced and is also being donated to Linux Foundation as well, because we believe that down the road, driving data collaboration, but at the same time be able to stay compliant with all the data privacy regulations all across the world will be a very important fundamental infrastructure for our sector and also other sectors as well. So that's why we believe this is really one of the key areas that we try to focus our energy on.
Yeah, no, I think that's something really important for people to gain an increasing understanding of, is that there are really some very exciting developments in the context of decentralized data storage, of decentralized data analytics, both from the safety and security standpoint, but also from enabling access. And, I kind of wanted to wrap up our discussion today by basically offering each of you an opportunity to say, something that is happening in this sort of as we begin to look forward after COVID, is governments and international organizations all over the world are looking at what can they do to build more robust systems to both deal with existential crises like COVID-19 or climate change going forward, but also to make things safer and more secure. So if we think about financial infrastructure from the standpoint of private sector participants, if you had one ask from international policymakers to sort something out, what would it be? Noah, over to you first.
All right. Two really clear asks actually on this one. The number one is, I think we can boost financial inclusion and security with more seamless yet secure KYC. So better databases, systems that we can work with governments on to get information about users and companies, individual people and companies. And the second one quickly is around just clarity of legal frameworks and sandboxes. I think if you had both of these things, policy sandboxes, if you have both of these things, you can drive robustness and financial inclusion, and you can drive innovation and speed of development. I think those are two really exciting levers to pull.
Yeah, I think particularly on the first one, the opportunities around sort of federated sovereign digital identity systems are really immense from the standpoint of both financial inclusion, but also from the standpoint of improving market integrity, but also reducing compliance costs and opening markets. Huge stuff. Kahina, over to you.
Yeah, well, three quick things. So I agree with Noah, so I'm not going to repeat what he said, but we do believe that, in order for innovation and really breakthrough to the next level of where we know this ecosystem is heading, we really need to have these, co-creation systems. Sandboxes are great, and we believe in those, and we believe in co-creation. But I think there's a cultural mindset that we have to go through. I know as a banker, I've had to evolve how I think about this. And we used to say, it's all about control. Trust is good, control is better. And now we're in this ecosystem that is going to require us to collaborate. And the same way that we had to learn in the platform model, you collaborate to compete, right? You now have to collaborate to control and to make sure that the controls are not hindering the growth opportunities. So really, continue in everything we're doing around kind of data sandboxes, regulatory sandboxes. Digital identity becomes really important for all the reasons we already talked about, AML, making sure that money isn't going to people that it shouldn't be going to. But fundamentally, I think we have to get into this mindset of, in order to create the ecosystem of the future that allows participation, drives prosperity, and ensures safe experimentation and transparency, we are going to have to work together, because there's not one single stakeholder who can do this alone. We really do have to work together as an industry. So that's my invitation to collaborate more aggressively and purposefully to that end.
Yeah. I think that's a great one, and it's certainly something that we're seeing increasingly coming up as a result of COVID, particularly in the pharmaceuticals context. And I think there's some real lessons from some of those experiences that we can be thinking about in the financial services context. Henry, last words, over to you.
Right. Well, on one hand, I think the trend of digitalization is inevitable, right? So I think all the jurisdictions should really focus on how to actually, on one hand, coming up with more clarity on data regulation, but also at the same time, being able to invest more to build out the data infrastructure required to enable better collaboration among partners who own data, right? So things like infrastructure to help facilitating federated learning, building up of models, and also how do you enable trusted transmission of data across borders. I think that would be a very important aspect to enabling a fully digital economy across the world.
I think that's exactly right. And I think even if we can't agree on exactly common and harmonized approaches to data, if we can agree systems that allow federated analytics, decentralized sort of storage, these enable us or give us possibilities to address some of those issues, to get some of the benefits that we're looking for. So thanks very much, Noah, Kahina, and Henry, for a really good discussion today. And thanks to our audience for joining.
Thank you.